Speaking of the Fed, I've heard this from several investors. It's a prevalent view amongst a lot of people in the gold and silver space that the Fed has been bluffing. In the last meeting, they indicated rate hikes, 3 to be exact. They're not actually going to do it. That's just political posturing. And the reason is the insurmountable level of debt that the nation has, $30 trillion close to, that really cannot be, you can't raise interest rates on that. It would be unaffordable for the Treasury. What's your view?
Well, the Fed's talking about maybe 50 to 75 basis point increase in interest rates. And that is not catastrophic in terms of debt servicing for the U.S. government. It may be more catastrophic for corporations and individuals, because if the Fed starts raising its Fed funds rate and its benchmark rates, you could see consumer rates and corporate interest rates go a lot higher, faster. And it could put a bigger squeeze on corporations and individuals. But, I think the Fed actually has more wiggle room than some of the gold and silver commentators give it credit for. And I do think that you could have a 50 to 75 basis point increase in the Fed funds rate and in treasuries without having a major negative impact on the debt servicing issue. Obviously, the debt servicing issue is problematic, and they have to pay attention to it. But there is scope for higher rates before you really start having major problems, I think.
Well, has the government budgeted for this higher debt servicing cost? I mean, how are they going to finance it? With higher taxes, with more debt, with MMT? What's the plan here, Jeff?
Well, that's the problem. And that goes back to the fiscal policy issue. It's not the monetary policy, it's the fiscal policy.
Yes.
And the fiscal policy is completely kaput. I mean, you have such disorganization and disagreement within the Republican Party, within the Democratic Party, and between the two parties. You don't really have a functional group. And so if you think about, there's an old Soviet era joke that a Russian child is asking his father, why do the U.S. have elections every 4 years and the Soviets have 5-year plans? And the president says, this is another example of the superior mind of the Soviet people. We remember their promises 5 years. They remember them 4. But if you look at fiscal policy, these guys are going like month to month. They're not, there's nobody with a 5-year plan in the U.S. government, at least at the top level. The lower level people at the Fed, at the Treasury, and other people, they're looking at this from a long-term perspective and they're understanding the issues. But when you get to the top level policymakers, both within the administration and within the Congress, these guys, at the most, they're looking out 12 months. So there's no 5-year plan there, and there's no vision as to how you get out of this.
So what you're saying is that the White House could take a page out of Xi Jinping's book.
I don't know if that's wise, but yeah.
Okay.
A little bit of management skill would be greatly appreciated on the part of the U.S. government.
Well, that aside, what is that going to do? What is higher interest rates going to do for, let's start with the stock markets first. Mm-hmm.
Well, the first effect of increase in interest rates is that the stock market tends to weaken because you have a lot
But we've already, so here's my question, Jeff, is that the market has already, have they already priced that in? Have investors already foreseen 3 rate hikes? Suppose they do raise interest rate by 75 basis points. I suspect nothing would happen because everything's been already predetermined or premeditated.
There's a portion of the equity market and the investment community that has priced that into their models. But there's a larger portion of dollars invested in equity markets that is valuation model driven. And they may anticipate increases in interest rates, but they will not necessarily lighten up their stock portfolio until the actual event. So when you see a 25 basis point increase in interest rates, then you would have an immediate, stocks have to be that much lower to be competitive with interest rates. But after that, then you have it kick back up because you have other people saying, okay, we already knew this was coming.
Would you characterize 2022 as being more of a risk on, so basically a continuation of last year, a risk on environment, or more of a risk off environment, given where monetary policy is headed?
I'm not quite sure what risk on, risk off means.
Risk on being like, where we're putting more money into the risk assets like stocks and cryptocurrencies, perhaps. Risk off being we're taking risk off the table, putting that into safe haven assets, whatever you might characterize safe haven assets to be.
I know what the concept is, but I say, if you think that stocks are risk on, look at the stock market. Look at the stock market since 2010. That's not a particularly risky thing. It's had much lower volatility for most of the last 11, 12 years than, say, gold and silver. But then the stock market is an index of 500 stocks or, 30 stocks, whereas gold and silver are single assets and they're much smaller. So it's not really comparative. I think that what you're going to see is more of the same in 2022, at least in the first half of the year. So the stock market will continue to be driven by A, ample money supply, and B, stock buybacks by corporations and increased dividend yield generation, because I think the economy is still going to be strong. These companies will have free cash flow. They will use some of it for business investment, but a big part of it will be dividends and stock buybacks, which will keep the stock market up. At the same time, we think that gold prices probably are flat to slightly higher, maybe 2% higher on an annual average basis next year. And silver prices might be 2% lower on an annual average basis next year. But we do think that investors will continue to be buying large amounts of gold and relatively large amounts of silver, but not as much as they have in 2020 and 2021.
Why is that? Because, look, we need silver for the greenification of the economy. The infrastructure bill has called for the greenification of the economy on hyperdrive. So economists are speculating that silver, like other base metals like copper, will be much in demand for the next year and beyond. Do you not share that view?
I share that view with severe reservations. You have a lot of people talking about how electric vehicles are going to use 5 times or 8 times as much silver as a conventional ICE engine. In reality, if you talk to the auto industry and you look at the engineering reports, they're probably going to use 1.5 to 2 times as much silver. So I look at automobiles and electronics and the electrification, and I say this is all good for silver, but I think there's a tremendous amount of overly enthusiastic bullishness. And that has 2 effects. First off, the main effect is that, this is one of the reasons why we see a weaker silver price and lower investment demand for silver next year compared to gold, is there are a lot of investors who have listened to a lot of bad information and they bought silver at, $28, $30, and they were expecting $100, and now it's $24, $25. And you're seeing a lot of bearishness and a lot of there's a lot of dissatisfaction that they were sold a bill of goods. And I think one of the things that we're going to see, and I think I've talked to you about electric vehicles and going forward, I think one of the things that you're going to see in 2022 is a much closer scrutiny of what electric vehicles and the green energy revolution actually mean, both for the economy and for individual metals, everything from copper and nickel down to silver. If you look at the International Energy Agency's big report this year on the effect on metals, critical minerals and metals of the green energy revolution, silver's not in there. They're not worried about silver, and I think that there is going to be any number of investors. There already are a number of investors who are showing their dissatisfaction for silver relative to gold because they feel they've been sold a bill of goods by overpromoters. And I think that that's going to continue to weigh on silver relative to gold in 2022.
So you're not a quote unquote stacker, as they might say, Jeff.
No, it's funny. I am a stacker. I mean, I've been stacking silver since the 80s, so, but I'm a rational stacker.
I understand. I want to close on gold, and then we'll leave it there. Central bank buying of gold, has that been? Have you seen recent activity pick up on that front?
Well, it picked up in the second quarter, and it's tapered off a little bit in the second half of the year. It's a little bit clouded because of the Turkish use of gold in monetary policies, but if you look at non-Turkish central bank activity, what you saw, and I think it's important for the future, because what you saw was a number of central banks, central banks tend to be more price sensitive than private investors, and they tend to wait for lower prices. And what we saw in the first half of this year was central banks buying between, say, 1740 and 1840, really 1780 and 1820. So that sort of signals that central bankers as a group were sort of looking at the gold market and saying, okay, $1,800 used to be the record price, but now it's probably a good price to buy from a long-term perspective. You got to remember, central bankers don't have an investment horizon the way institutional investors or private investors. They don't say, what's the outlook for gold for the next 3 to 5 years? They say, what's the outlook for gold going forward? And what they're basically doing is they're signaling that they think $1,800 is a cheap price for gold on a long-term basis.
And have you noticed a divergence between gold and silver prices this year?
Well, yeah, it's interesting because I think that the gold price has held up better than the silver price in the second half of this year. I think the silver price probably outperformed gold, if I remember, a little bit in the first half of the year. But then again, you had this dissatisfaction with the overselling of silver. And so I think you had a weaker silver price in the second half of this year than you did gold prices. I
bring that up because I'm assuming you are projecting this divergence to last going into next year, because you're projecting gold to go up slightly in the order of maybe 2% from current just a few $100 from current prices, and silver to go down 2%. So they're moving in different directions according to your outlook. I'm wondering, well, you've explained that, but typically in the past we've seen gold and silver move in the same direction, with silver outperforming in bull markets, right? So that doesn't seem to be the case with your analysis for 2022.
It's, they move broadly in the same direction. The correlation historically, since gold prices were freed in 1968, 1970, the correlation between changes in silver prices and changes in gold prices is 78%. So you have 22% of the time, you can have divergences in the gold and silver price movement, direction, and size. And so it's not that surprising. What I think what you're seeing is, on the one hand, I said, some investor dissatisfaction with silver because they feel they've been lied to. But you also have a much broader base of investors globally interested in gold. So, it's not just a U.S. market, it's a global market. And if you go to the Middle East or Southeast Asia or Europe, you'll find a greater proclivity toward investing in gold as a safe haven than in silver. They like silver and they use silver, but not as much as gold.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much, much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof. to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.